Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, we're going to get right into the charts and the data here today, so let's walk it over here. Our morning market blast. Take a look at this. So number one, last night Jerome Powell was on 60 Minutes, and he basically said 3 rate cuts is kind of what the Fed is guiding towards. That's what they're thinking is their maximum amount of rate cuts this year. Remember, the markets were pricing in 6. It's now down to 5. We'll take a look at that Fed watch tool in just a minute. Now, again, the key here was the first rate cut to be expected in the second half of 2024. So again, we'll take a look at some key things on the Fed here. But again, Jerome Powell very strongly guiding the market towards 3 rate cuts and starting in the second half. I looked at the Fed watch tool just a little while ago. The market is still pricing in May as the first cut. However, we are seeing some adjustments later on. We'll cover that. Next up, Caterpillar beats on earnings. They missed slightly on revenue, just by a hair on revenue. The stock is moving slightly higher today on the back of the earnings beat. McDonald's beats on earnings but misses on revenue, and that stock is also moving lower. All right, let's keep it going. This is where things get even more interesting. All right, so the yield curve. We know about the yield curve, how it's been inverted. Interestingly enough, just a couple weeks ago, it was looking like the yield curve was going to uninvert. Now again, historically, what we do know is that when it uninverts, that's usually when the market begins to fall, right? It's interesting, but that's really what ends up happening. The inversion portion is usually the preemptive portion before the stock market starts to fall and the economy spins into a recession. Interestingly enough, because of the strong jobs data and the other economic factors out there, we are seeing the inversion start to increase again. So it was just about to uninvert. Now it's starting to widen its path again, which again shows us that economy in the short term is strong and the uninversion persists. Next up, government jobs continue to surge while private sector layoffs mount. So if you looked at the data on Friday for government jobs, you saw that again, another spike higher in government hiring. We obviously know the debt that is going on in this country here in the US, really globally, let's be fair. But again, the government continues to hire. We continue to see almost daily announcements from private sector jobs, publicly traded companies of continued layoffs. Now, again, the layoffs are not amounting to anything significant to push the non-farm payrolls into negative territory, overcompensating for the government jobs. But it is something that I think we have to watch as a trend going forward. Next up, on Friday, if you took Meta, Amazon, and Nvidia out of the NASDAQ 100, the index would have been down. Think about that. The NASDAQ was up, 200 plus points on Friday. If you just took out 1, 2, 3 stocks from the NASDAQ 100, the amount of points they contributed, the market actually, the NASDAQ 100 would have been down. Now, the reason why this is important, it tells us something about market breadth. It tells us that there are a few stocks that continue to lead this market very sharply to the upside, while a lot of the other stocks are stalling out. In fact, if you look at the breadth, right, 52-week highs were 52-week lows. If you look how many stocks are trading above their 50 moving averages, believe it or not, it's not very many at this point, a very select few. Take it one step further to the S&P 500. On Friday, if you took Meta, Amazon, Nvidia, Microsoft, AMD out of the S&P 500, the S&P 500 would have been negative as well. So again, listen, markets are continuing to go up, right? We continue to see relative strength in these indexes, but again, what's the driving force here and how long can it last? Can Meta continue to put up 20% daily gains to keep this market floating higher? Again, that could be a problem at those levels. All right, lastly, again, guys, just going back to the non-farm payrolls number, I think it's again important to take a look here, and we just again reiterate the non-farm payrolls showed a fair amount of government jobs increasing versus the overall thing. And then lastly, this is an important one, guys. Very, very important right here. $8.9 trillion in treasuries is basically going to have to be recycled this year. It's coming due. It's going to have to be redone at higher levels of interest. Interest on the U.S. debt continues to basically be around or just shy of $1 trillion. But again, as you refinance more and more of this debt that's coming due, those numbers at current interest rates are going to be higher unless the Fed can dramatically cut rates. But right now, according to the Fed, that's not looking very likely. All right, I want to get into a couple other things here, guys. I just want to show this, guys. This is some great kind of graphics here. If we take a look at this, right? Here is the NASDAQ 100. It was up 298 points on Friday. All right, if we look at the amount of points that pulled that index up, Meta on Friday accounted for, and I hope you can see this, it's a little small, 176 points of that 298. Amazon, 72 points. NVIDIA, 42. Those are the combinations right there. And you want to throw in Microsoft, 28.6, AMD, 16.2 points within the index. And again, you can see that you basically have these technology leaders. It's either semiconductors or mega cap Magnificent Seven. Those are accounting for the majority of those gains. What I like to do here is I want to flip it over here, and let's flip it over to the S&P 500 and really show this real quickly here. Again, take a look at this. Meta, all right? So again, if we go to the S&P 500, bear with me there, let's flip it over. If we look at this, Meta again accounted for in the S&P 500 21.4 points, Amazon 13 and change, NVIDIA almost 10, Microsoft 6.5, and AMD 1, Avago or Broadcom 1. And essentially, again, you take those out, the S&P was down. All right, couple other things I want to show you here, guys. Let's take a look at some charts here. All right, so what is this showing us here? This is an interesting chart I wanted to bring to your attention. It is basically showing the U.S. unemployment rate. Okay, that's the dark purple line, and the U6 unemployment rate, which is this one. Now, U6 is people that are underemployed. So let's say you have a part-time job and you really want full-time work, but there's no one hiring for you for full-time. So again, technically you're not included. If you're part-time, you're not included as unemployed, but you are included in the U6. Now, if you look at this, this is something I was looking at. If you look at this chart, these are recessions, by the way, right? So again, every gray line here is a recession going back to basically 2000. What we can see is that U6 begins to uptick just before the unemployment rate upticks here, right? So again, this one's a little finicky because it was COVID, so it's kind of aligned because it was more like a strike force thing. But again, history shows us that the U6 begins to uptick. And basically what the summary of this tells us, let me just break it down super simply, is that essentially when things start to weaken in an economy, people go from full-time work and they get their hours cut back. And so all of a sudden they become part-time because that company doesn't want to really fire them yet or lay them off, but they're saying, listen, we got to cut back some of your hours, and therefore, again, they wouldn't be included in unemployed, but they are included in U6. So it does make sense that as we see an uptick here on U6 just ahead of a recession, the unemployment rate is fast to follow within a few months of that period. Now, last thing, and the reason why I brought this to your attention is that the U6, all right, U6 unemployment in November was 7%, okay? In the U6 in December was 7.1%. The U6, which we just got on Friday, you know what it was? 7.2%. Okay, so the point is this, U6 is slowly increasing. We are seeing it increasing ever so slightly, and what it tells us is that just be aware that later this year, maybe 3-6 months from now, if this trend continues on U6, it eventually will lead into one of these per the data, per history. And I think that's a really interesting little tidbit to kind of keep an eye on. All right, one more chart I just want to show you guys here. This is your unemployment chart. Again, we see the latest unemployment over here at 3.35% or right around there, right? So that's basically coming out to this year. where we generally are. I think it was at 3.7, but again, that's factoring in potentially a few other factors. But this is one of the things I wanted to show you guys. This is what I'm concerned about. This is the 70s. So initially in the 70s, you had an uptick in unemployment, right? And what we saw was, as the Fed battled this by raising rates, they then started to loosen too quickly. And by the way, this is what Jerome Powell is saying, why he wants to not raise rates too fast. He said so many times that he doesn't want to repeat this, right? So again, inflation spikes, comes down as the Fed tightens, and then the Fed is forced to loosen because the economy gets into a recession. That causes a secondary spike higher before it comes back down. The scary thing here is that what we're looking at here, right? All right, so again, that's inflation, by the way, so that is the correct number. But again, that would be the concern here, is that the Fed, if the economy starts to slow and they start cutting rates in the second half of the year, do we then see a resurgence of inflation that mimics what we saw in the 1970s? And this is, again, what Jerome Powell has said he wants to avoid. I would counter with, can he avoid it? The amount of U.S. debt, right? He even said on 60 Minutes last night, the trajectory that the U.S. is on is unsustainable, which again is a no-brainer, right? I mean, you can't be adding trillions and trillions and trillions per year in debt for infinity amounts of time. Eventually, something's going to break. But again, this is something that I'm looking forward to, or seeing if that's going to come to fruition. Fed Watch tool real quick. I promised you the Fed Watch tool. As we see right here, let's take a look. What we can see is that we still have a rate cut priced in for May, 55.3% chance. But this is interesting. Look at this, guys, right here. Basically, what we have is now in June or July, they're basically up in the air. So what it's starting to look like is we'll see a cut in May per what the markets are expecting, and then there'll be either a cut in June, or maybe not. Maybe they'll skip, and then they'll do it in July. It's one or the other here at this point. So again, it looks like they'll skip one meeting. If you go back to basically a week ago, it was every single meeting going forward into the end of the year. So a little bit of a change there. Right now, the market, again, anticipating 1, 2, 3, 4, 5 cuts instead of the 6 cuts that the market was pricing in a week or two ago. All right, let's get into some charts here, guys. I wanted to show you Meta's chart. This is something I'm keeping an eye on. Meta, again, if we look at this, we have our high pivot going back to 2018. We connected through our high pivot of 2021. And look at this move. First of all, this is one of the most remarkable stock moves I've seen for a company of this size. You know, this and NVIDIA are beyond, like, I've traded for 24 years now, and I don't even remember. Even in the dot-com era, which was the beginning of my trading career, I still have a hard time remembering craziness. And again, companies back then were not this big. I mean, the biggest companies were like $100 billion, not $1 trillion or $2 or $3 trillion. But this would be a major target up here. Interestingly enough, it's right at the 500 level on the chart. So again, just a level if we continue up on Meta. I do believe Meta is trading down a little bit this morning. So we are seeing it just down ever so slightly, not much, couple dollars on the day. Maybe a little profit taking going on there. I do want to bring up the U.S. dollar. The U.S. dollar here, guys, this was fascinating to me because we had the bullish pattern and then they did a little fake out, right? And if we looked at this and we look at this, right, I remember going over this very chart with you guys. Up, bull flag, up, bull flag. And I remember saying to you guys, this is a bull flag. The dollar should go up. And then we had this one day where the dollar flushed. But again, the flag pattern did not fail. You look at these lows of all these candles in here. They're still there, closed right at the lows. And then it was like a fake out. We saw the massive move up, and look at what the dollar's doing today. It is pushing higher. So where is the dollar going? Well, first off, we have hit my first target. If you guys remember, there was a target price right here, right? So if we look at this high pivot right here, that we're actually piercing. So I actually think based on this flag pattern, we're probably going to go a little bit higher on the U.S. dollar. Where would that likely take us? I want to show you, if we zoom out, where that likely would go. And basically, you can see the larger pattern here. But what I want to do now is just simply take a pivot high here. So take the highest point from 2022. Let's connect it to the secondary pivot right here. And where does that trend line converge to? And let's draw it in right now, and we'll see. So it looks to me like where you're going to run into, or the dollar is going to run into, a significant amount of resistance, right? We have this, and then this. It looks like it's right around 105. That will be major resistance, guys. That would be a level where I would be somewhat shocked if we get through very easily. I would expect a pullback on the US dollar. Now again, the dollar pushing up is hurting. You're seeing it. Gold is down today, and a lot of the other commodities traded in gold are under a little bit of pressure. If we go to the 10-year yield, the 10-year yield is pushing up. Remember this little area here that I have in for you guys. So if we take a look at the two key trend lines, and I got to zoom way out for this, but if we look at these, right? We look at this pivot low to pivot low, that gives us this resistance level. Then we do these lows to this low, gave us that little low. I'm now going to bring it in. Let's zoom it all the way in. And what do we have here? We have our resistance line coming into play right around 4.2 to 4.25%. Doesn't mean it can't break through that, but as a technician, that's your target zone now for where the 10-year goes before it starts hitting key resistance. All right, couple other charts that I just want to go over briefly. I do want to take a look at this Amazon one. I still remember Dr. B in the office saying, hey guys, I have a trend line. This was like 3 weeks ago, 4 weeks ago, whatever it was. And this is when NVIDIA was like $200 lower. And he's like, oh, there's this longer term trend line, going back to 2020, and you connect these highs here through here, and this comes in at around 680 to 700 area up here. Well, lo and behold, crazy enough, this is, by the way, the weekly chart, or this is the monthly chart on NVIDIA, but look at this. Based on where we're trading pre-market, and I haven't looked where we are now, but we were literally around 685 right up into this level. This should be a big level, but then again, there's been a lot of big levels, and NVIDIA continues to blast through them. At some point, we'll get kind of a blow-off top scenario, maybe on Friday combined with today, but watch for a reversal right around this area. You get a reversal day, like an outside bar day, some sort of gap up and crap out where it closes down on the day. That, especially if it coincides with that trend line, could be a very interesting level to go into. All right, guys, so I just want to jump back to center screen here. I want to give you a quick little update. Today I'm meeting with the Lux Algo people. They have the algo, the indicator that I am creating pretty much all done. We're just going to go over it today. I have a lot of key things that I think this is going to bring forth in terms of ease of trading and signals. So again, just stay tuned for that. I will continue to give you updates, but again, I'm hopeful that it'll launch within a few weeks. I'll talk to them today, but thank Lux Algo for their amazing support and really taking on this task with me and working with me to create amazing things that should benefit each and every one of you. Let's take a 30-second break to just touch base with them.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, let's get back into it. You know your Bitcoin chart. This is the chart I've shown you pretty much every day for the last, 2 weeks or so. Notice again where we've been stalling out. We've been stalling out right here underneath this upsloping trend line. Remember, resistance, then it became support, 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 support. We broke below it, and it continues to be resistance. Now, what I will say is Bitcoin has a chance here. It has a chance to break through this level. The reason I say that is because if you look at this, and let's zoom in on this chart here, all right? So if we look at this pattern formation right here, what do we have? And let me grace these lines here. We have an up move with sideways consolidation. What kind of pattern is that? We know our patterns, right? Up move, sideways consolidation, right angle, approximate right angle. That's a bullish pattern. It can potentially break out. Now, as of now, it's still stuck at resistance, right? So if it can't get through, then the fastest move is usually the failed move, right? So if, in other words, you have a window here on Bitcoin to break through probably within the next 24 hours. If this can't break through this 44,000-ish level, close above and confirm, then be careful because it could really start to dump out. But right now, this has a shot here to make a little bit of a move up, back above 40,000, 44,000. If it does, you might be able to retest 49,000 on the charts. All right, so we'll continue through there, but I just wanted to update you on that one. One chart here that I'm keeping an eye on, this is Chainlink. So again, Chainlink is an interesting one here. What we see on Chainlink here is, check this out. So we have what we would refer to as the potential for a measured move play on Chainlink, right? So you have basically this move up from this low here to this high here. Then look at all this bullish consolidation. Now, what the idea is that what you can do is replicate this move right here to the upside. That would be what the measured move would entail. If we do that and we look at this, all right, if we do that and look at this and let's do the measurement with you guys. If we take that move, it's basically a $9 move up approximately. So you would take an additional $9 from this low, okay? Let me select that tool again. And if we take that move up, it would bring us to an approximate target of 22.50 to 22.75. I apologize, I wasn't showing that on the screen. But basically, there's your measured move, about $9. Measured move would give us about a 22.50 to 22.75 target. Again, that would be a measured move. Now, one of the cool things about this is what you do is when you get measured moves like this, you look back at the chart and you see, okay, well, what does this match up with? Is there a level where this can possibly match up going back? Because you always want a confluence of indicators. And one of the things I'm seeing here is there is right through here, there's a pivot point right in here, right through here, right through here, a lot of levels kind of coexisting right around 22, give or take, $22 to $23. So again, just one of the interesting charts to show you on Chainlink there. One more that I wanted to show you is Cardano. Cardano, again, potentially putting in a little bullish consolidation. Look at the pattern formation. This level held. So again, this was support. You can see it hit, bounced back to this line, came down here, then bounced here, then pulled back. Never quite got back here, but now is hitting this level. It has not broken out yet. Just like Bitcoin, it hasn't broken out. But if it can get above here, you start to get some momentum, it might be able to retest this area right up here. Potentially, if it continues to get through there, you could be looking at that. Now, on the other side, a good technician looks at the positives and the negatives. If it can't break out here and breaks this, then you go right down to 40 cents. So again, just you have your levels. It really does guide you with which is the most likely. Right now, it's kind of a gray zone, but maybe with a slight positive bias, we have to see if we can get through these levels. All right, quickly, let's go through gold real quick, guys, as again, I only have a couple minutes left. Gold, again, just continues to do its thing. It's got the inverse relationship with the US dollar. Again, what we could see here is the gold continues. It almost got back to the high level right here, just shy of that a couple days ago. Then the jobs report came out, the dollar spiked, and that really is hard for gold to fight. When the dollar's going up as dramatically as it did Friday and today, very hard for it to hold back. Now, having said that, we still have a trend line right through here, which we're right onto, right? So we have that level right there, you have this area right here, and then you have this area right here. So there's a lot of supports here. I continue to think that the bigger pattern is the dominant pattern. If you look at the bigger time frame, for instance, if we go to a weekly chart, the weekly chart, very, very important to just continue to remember this pattern. So whatever this does over here, and again, this is the weekly, so you see how insignificant the price action is. This is the pattern that I'm focusing on. Shoulder, right? Shoulder, head, shoulder. And again, hasn't broken out yet. Has to break the neckline and confirm. But that's the bigger dominant pattern. So again, you get this choppiness in here. The only thing that would concern me is if we start coming down to the low of this shoulder again around 1850, 1800. You start doing that, then that pattern could fail. But as long as you're trading in this range, and gosh, we're still above 2000, this pattern is the most dominant pattern. Therefore, my job is to go with that pattern. Looking at silver real quick, guys. Again, let's take a look at the daily on silver. The silver chart here doesn't really show us a whole lot. It just shows us a chop fest, right? So I've talked about the connectors here from above, and then you connect the lows here. I still think that one of the possibilities is you're still going to come down just a little bit lower. Sorry, my line's not the greatest, but again, still could come down to 21.50 to 22 on spot silver. Okay, natural gas and oil. Let's take a quick look at oil here. Oil again on the daily chart is trading down, but I do want to show this chart here because I do think it's important. Look at the retrace. So again, this is one where you had the inverse head and shoulders, right? And it broke out and played most of the way out, but it actually did not achieve my target, which was just basically at $80 to $82. All right, again, got to 79, didn't get there, but look at the retrace. Now we're right at technical support right here. Connect this low to this low to this low, and you're right there. Plus, you have the neckline right below that. So there's a lot of support on oil at $70 to $72 a barrel. Break 70, then oil's in trouble. But again, as long as it holds, that's your area to look at. Lastly, quickly looking at natural gas, not a whole lot to update you guys here on natural gas. It continues to just consolidate right on this line. Now, the fear here is what type of pattern are we making? We have a down move, and we're now going sideways. To me, that looks slightly bearish. So to me, there's a small chance it could dip. You guys know I've been handcuffing myself from adding to my natural gas. I trade the UNG off of that, basically saying it might pierce $2, and that's kind of what I'm waiting for. So if it does that, then I will add. But essentially at this point, I'm just stepping back, letting the chart do its thing, give me more signals, either a flush below 2 or some sort of reversal signal that cancels that bearish pattern out, and then we can play some ball with that chart. All right, guys, back to center screen. I got to get going as my traders are waiting in the live trading room at InTheMoneyStocks.com for day trades. It's been a great start to the year in there, some great profits. Again, have a great team on there. I have such a good team of traders that are guiding people and just helping everyone make money. You guys come check that out. I really do appreciate you tuning in, and I'll talk to you soon. Take care.